Welcome to Boring Money, Rich Life. I'm your host, Joy Hicks, and today we're going to talk about trading versus investing. I feel like this is really important to talk about because I'm learning that there definitely is a difference between kind of like day trading and investing. And I've kind of shared that I've been doing a lot of research about how actual millionaires build wealth. And one thing that I'm learning is that most of them advocate for slow growth. So, building their wealth over time, being consistent with their savings, being consistent with investing. That's really how they actually build their wealth. Now, that's very different from what you'll often hear on social media, where it's like, oh, if you give me $5,000, I can double your money in 6 months, right? Now, who wouldn't want to do that? That's very attractive because it's like, oh my gosh, if I do this, I can get my money back plus some in this quick amount of time. And all of the research that I have found, all of the books and information that I've personally been reading, definitely advocates for more long-term investing strategies. And so I wanted to talk about that today because it really is a difference. And I think that could be a reason why a lot of people don't see the value in investing because they're more so wanting that quick, get rich fast type of strategy. And then, it's not very attractive to really be consistent with investing for years and years and years. So I did want to talk about it because, again, most of what I'm seeing is recommending and advocating for long-term investing. Now, I am not a financial advisor, so definitely do your own research for yourself. But I did want to talk about it because me personally, I do believe in more long-term investing. I am not like the get rich quick type of person. Like it took me years to kind of put myself in a position to be able to buy a home by myself. And it took years of me building my credit and learning and researching and all these different things. So me personally, I do believe in more long steady growth than I do get rich quick. But I definitely do not log into my investment portals every day. So, like my 401k, even my own personal investments that I've set up on my own, I do not check those every day because with a day trader, they're definitely going to log in, they're going to see what the markets are doing, and they're trying to kind of beat the market. They're trying to time the market okay, if I put money in at this exact time, if I put this amount in at this exact stock, then I'll get this return. And they're really trying to kind of gamify the system. And so, sometimes it works, but I feel like a lot of people who do that don't really share how much they've lost. So they'll definitely share their gains, but they won't share how much they've lost doing that. Now, me personally, like I said, I do tend to agree with more long-term wealth strategies. And so because of that, I don't really need to log in every single day. So I do track what I put into my investments. With my 401k, not so much because it is automated. So we do have a chart that I can log into. I can see what it was when I first started working at my job all the way till now to see how it grew. But with my actual personal investments that I'm kind of putting in myself, those ones I do kind of keep a spreadsheet. And so with the spreadsheet, I'll be like, okay, this month I had X amount, and then I checked it again, it's grown. This month I'm putting in X amount. Did it grow? Did it drop? But I don't really bother with it. I put the money in there and then I just kind of let it do its own thing. And I feel like that kind of reduces the anxiety because if you're a day trader and you're seeing your money fluctuate every single day, that's going to put a sense of stress. Oh my gosh, I need to put my money in right now or I'm going to miss this opportunity. Or my goodness, I need to take my money out at this right opportunity because everybody's selling. So I don't want to lose my money. And the issue with that is, and what I've learned is that there's a lot of fees involved when you're constantly trading stocks that way. Now, depending on who you invest with, whatever company you do trade with. You know, the fees are going to be higher, they're going to be lower. But when you're constantly doing that, you are racking up fees. And then if you do have gains, you're also putting your gains at risk for taxes a lot more than you would if you just hold, like buy and hold. So it's really important to kind of understand like what your strategy is, because especially with like selling your stocks, if you are investing in stocks, but if you're selling your stocks under a year, your taxes can definitely range from like 10% all the way up to like 37% with short-term capital gains tax. Now, if you hold those same stocks for over a year or more, sometimes it can be like zero if you really have a good like tax advisor and things like that. It could be like 15% or 20%, but it does tend to be a lot lower than what it would be if you are trading. Now, mind you, again, you have these short-term capital gains tax if you're trading, and then you're also racking up a lot of fees. So if you're holding for the long term, you're only getting those fees once you finally decide to move your stocks and things like that, but you're not getting it every single time you're putting money into it, but you definitely are once you're trading often. So that's definitely a big difference. A lot of people who do day trade, they don't talk about the fact that they do rack up a lot of taxes and a lot of fees. So that's definitely one of the reasons why like I'm not really attracted to day trading, because again, for one, it just seems really stressful. Two, the fees, and then three, the additional taxes, which I don't really want to pay. So it is important to kind of know also what your strategy is. That's why a lot of people do not recommend investing in things you don't understand. Like Warren Buffett, that is one of his biggest mottos, right? It's important because you need to understand and you need to kind of know, like, if you have the opportunity to make money. So, me personally, because I'm getting started, I'm newer, I invest in like ETFs or like index funds. And that kind of diversifies my investment. So, I'm not too worried about a single stock going under because I'm already diversified by the index fund that I'm invested in. Now, if you are day trading, it's going to be really important that you watch your stocks every day, which again, it's a hassle in my opinion, because you just have to kind of monitor these things. You have to really understand the difference between like emotional buying, emotional selling versus if you actually do need to pull your money out. So there's just a lot of things to monitor. And I will say like for me, it just doesn't really seem worth it because I know my strategy. I'm comfortable buying at any time. And I did share with you guys that I do like to watch this YouTuber named Jaspreet Singh, and he has this strategy like ABB, always be buying. And so he also invests in the S&P 500, and he talks about like for him personally, he doesn't worry about if the markets are down, he's still going to buy because when the markets are down, that's actually a better time to buy because you can purchase more shares for a cheaper price. Again, we are investing, so we're trying to get things at a cheaper price because when they go up, we have the opportunity to make more money. So when things are getting good, that's usually when you see people wanting to invest or like the market is doing well. And so that's really when you see people wanting to invest the most. And then that's when stocks are actually the highest and you can't really buy as many shares as you would in a down market. So if you have more of a long-term investing strategy, you're not as fearful because during a down cycle, that's actually kind of the most exciting time because the potential to make more is a lot greater than when the markets are good. Even if you're investing in something like real estate, like right now is probably one of the worst times to invest in real estate because the market is so high. Interest rates are so high, things like that. Now, if we were to go into a recession and then houses are being foreclosed on and then houses are a lot cheaper, unfortunately, that does create a lot more opportunity than it does when houses right now are kind of valued at some of the highest prices they've ever been. So that's really the difference between having like a long-term strategy and knowing your strategy versus like day trading, we are kind of just like, oh, this looks good today. This looks good today. So I'm going to buy it. Now, I would say some of the reasons why people are pretty intrigued by day trading versus long-term investing is usually when they're like strapped for cash. That's usually the time when most people are like, ooh, that seems interesting. That seems like this could be a great opportunity, right? And I would say if you do not have a reliable nest egg, it's probably not the best time to start investing. Like you probably should prioritize just building up your savings account. If you have a lot of credit card debt, same thing. It's going to be challenging to focus on investing when you have a lot of debt or you don't have a lot of savings. And that's when people tend to be the most vulnerable and they do tend to go to like day trading, which is very risky because, again, you're trying to time the market. You're trying to outperform the market, which is very challenging, especially if you're a new investor and you really don't even understand investing. So, again, it's very risky also because of the additional fees and the taxes and all these things that people don't tell you about or you don't think about. Now, if you're in a good place and you have an emergency fund, your credit cards are paid off, your debt is controlled and things like that, that's a good time to invest because investing is a risk regardless, whether you're doing it short term or long term. So that's why, me personally, any money that I put in my investing account, I don't worry about it because I'm like, well, I already risked it, right? So if it grows, it grows. If I lose a little bit, I lose a little bit. Now, historically, the S&P 500 has, always increased, always recovered, even after down cycles and after recessions and things like that, at like an 8% average. So that's why I really don't worry about it. And I kind of think of it as like, hey, the money is already spent. So, like for instance, if I go to the store and I buy a new shirt or something like that, I'm not really worried about the money. The money is already spent. So that's how I kind of think about investing. And that's why I do tend to invest for the long term because I'm like, this is money that I'm okay with investing. I'm okay with, risking my money and seeing how it grows or how it goes. And that's why I do it for the long term. So when I do check on my investments, it's probably more like a every 3 to 4 week update. And the last time that I logged in, I was actually really thoroughly surprised because I did see an pretty big increase. I recently invested in this AI stock that I took a chance on, and it actually turned out pretty well. I don't know how long I'll keep it, but I was like, hey, let me just take a chance on it. I wish I would have put a lot more in it, but hey, at least it worked out. And that's how I look at investing. I'm like, look, I already have money for savings if something was to happen. My credit cards are under control. So this money I can invest and not feel bad about it. And so it's more of an enjoyable experience than it would be if I was day trading and I just put all this money into a few stocks and then the stocks, dropped and things like that. But it's very important to know what your strategy is. And then once you have your strategy, you just keep buying, whether the markets are up, whether the markets are down. That's how I'm seeing that most people actually build wealth over time. Now, to figure out what's the best thing for you to invest in personally, definitely consult a financial advisor. But thought it was very important to kind of talk about that because, again, a lot of people do get enticed by like the get rich quick, doing day trading, and then people don't often share kind of like the downsides of that. But as always, what is one boring thing that you can do today to start fueling your rich life? Again, I'm Joy Hicks, your host. Thank you for watching, and be sure to like and subscribe.